Hey, Sean here with another live stock review. We're going to dive into a recommendation from a customer offline, and then we'll dive into your recommendations right here on the call. Of course, before we get started, do not buy and sell stocks based solely on what you hear. Please make investments based on your own financial goals. All right, let's go ahead and dive in. The first stock we're going to take a look at is Riot. I'll show you here on my screen, Riot Blockchain. So let's dive in here. And what we're going to do is, if you guys haven't gone through this process already, I like to use what I call the 7. There's a feature in Tykr that automates this for you. We're going to break this down, take it step by step, the first stock, and then we'll kind of speed things up as we go so we can get through a few more stocks on this webinar. All right, so the 7 steps, high level, is just like 7 easy steps to truly determine if a stock is a stock you want to buy or something you should avoid. And again, this is automated in the tool. You can click here on the 7. We're not going to do that right now. We want to go through this manually, and then you can also go to the stocks page in Tykr and you can filter buy stocks within. That'll save you a ton of time. I could not wait to launch this feature in Tykr because it took minutes, probably 10 minutes of time, and compressed it down to seconds. Okay, so this is the first stock I received offline, Riot Blockchain. The first step I'd like to do is, if I don't know a lot about the business, is I go to the details tab and I'll read this little snippet of text, just talks about the description of the company, and then I'll go to the website. So what they do is they have mining operations in North America. They also have data center hosting, and they have other products within, but those are really the keys. It essentially is it's mining for Bitcoin, and they have the infrastructure to do that. I was kind of looking at, you can get a really good idea here with the photos, what we're dealing with here, just large data centers, a lot of compute power. We're going to get into that a little bit. I'll talk about some of the pros and cons with this business. But here's a really nice overview of what we're looking at with the business. All right, so let's walk through the 7 and understand if this is a stock we want to move forward with or something we want to avoid. And what I'm going to do on this call is I'm not going to tell you what to buy or sell. I'm going to add these stocks to a new watch list, and then I'm going to kind of rank them, in my opinion, from the strongest stock to the weakest stocks. We're going to try to get through about 4 stocks, maybe a few more. We'll see how quick this goes. All right, so the first step is to look at the summary. And if you guys haven't seen this already, I'll just give you a nice overview. I'll go to my watch list, and I'll keep this pretty concise. So stocks in Tykr, if you don't know already, they are rated as on sale, watch, or overpriced. When I created the first version of Tykr, I was thinking about, hey, what is the easiest to understand rating system around the world? And I was thinking about the traffic light. Doesn't matter what country you're from, everybody kind of understands the green light, yellow light, and red light format. So I thought, hey, what's a version of that? But let's apply it to the stock market, because I wasn't really seeing other platforms doing this. Like, how do you create an easy rating system? So I thought of the on sale, watch, overpriced framework. And so, it's very hard to get the on sale. Only about 15% of stocks in the stock market actually make it to that level. It's pretty hard to achieve. So right off the bat, we can see Riot is on sale. That's great. That's step 1. Step 2 is to look at the score. The higher the score in this hexagon, the stronger the investment. And what this does is it looks at 8 lines on the financial statements. You've got 3 lines on the income statement: revenue, net income, and EPS. EPS is very similar to net income, and the difference is it's just net income divided by outstanding shares. That's what EPS is. Essentially, it's profits of the company. And EPS is the number 1 most important line on these financial statements. So we'll get to that in a little bit. The next sheet you want to look at is the cash flow statement. We look at free cash flow. Free cash is great for, you can buy other businesses, you can invest more in marketing and sales, you can hire more people faster. It's great when you have a lot of free cash. All right, and then you've got the balance sheet. We look at 4 lines: assets, liabilities, debts, and equity. With these 8 lines, you want to see everything increasing except for liabilities and debts. You want to see those kind of flat as well as decreasing. We're going to break this down in a little bit, but that's the score. So we can see here 87 is quite impressive. Not a lot of businesses make it that high, so their financials are pretty good overall. So that's step two. So far, we're looking pretty good on Riot. Step three is to look at the margin of safety. Excuse me. The higher the margin of safety, the higher potential returns you can make. And essentially, what we're doing here is calculating the fair value and then looking at the share price and what is that discount. So we can see here we're 80%. That's the discount. And there's a saying from Warren Buffett, and he really focuses on a margin of safety as well, which is you want to be buying $10 bills for $5. That is where you want to be with stocks. You want to buy those fairly high fair values for a much lower price, ideally over 50%. Now to pause here for a second, to get to on sale, you need a score equal or greater than 50 and a margin of safety equal or greater than 50%. If you only have one of those above 50, then it's watch. If both are below 50, then it's overpriced. So far we're looking pretty good. Moving on to step four in the middle, this is the 4M confidence booster. We're going to walk through this. On the other stocks we look at, we'll skip this part, but this will give you a nice overview of how this works. So we use OpenAI in this case, to save a lot of time. There was a manual version of the 4M long ago, and that would take 5, 10, 15, 20 minutes to get through. It could give you the results you're looking for. It's just very time consuming. Well, thank you, OpenAI, for streamlining a lot of this. So let's break this down real quick. You've got the margin of safety kind of sums up everything. That's the math part of investing. The second M is the meaning. That's the business model. Really important to understand what kind of business model are you investing in and how scalable the revenue streams are. Scalable essentially means you can increase your revenues much faster or much more than your liabilities. The biggest liability in a business would be payroll. Then you have the moat. Moat is how a business compares to other businesses in the same sector. In industry, you want that strong competitive advantage. And then the management is the track record of the CEO. Doing homework on all four. There are people that have taken days, if not, or I should say hours, if not days of time to come to a solution. We reduce this down to seconds. In this case, it'll be about a minute or two. So let's keep cruising. All right, so we got the gamification here. What are we going for? We're going for 80 to 100, high confidence in this stock. Moderate is 60 to 79, and anything that's 59 or low, that's a pretty risky business. I tend to avoid. All right, so let's go through. We got the margin of safety. This just kind of rolls up all the math. We've got that score. We've got the summary and the margin of safety all in one location. Let's keep going. All right, business model. So we're going to use OpenAI. Go ahead, click this button, and we're going to see AI go to work. Let's see what this business does. Yeah, nice summary. How do they make money? Bitcoin mining, cryptocurrency sales, hosting services. And we can see here the revenue scalability. Scalability of the business is a 5.5 out of 10. We've got a lot going on in the background. We do factor in OpenAI as well as a few ratios, including net profit margin, ROIC, ROA, and ROE. Those essentially stand for return on invested capital, return on assets, and return on equity. And we can take a look at ratios in a bit, but these are probably these three right here, the most important ratios that a lot of large corporations look at. Very, very important. Let's keep going. All right, we'll keep looking at the meaning here. We do pay attention to the alpha. If you ever see alpha and beta in finance, here's the difference. Alpha is how much a stock outperforms the market. You can see here beating the market by a lot over 5 years. And then beta is the volatility. We'll take a look at a stock here to show you guys what that looks like. We'll go to, I think I took a look at GameStop last week. Let's go to AMC. We'll see. Yeah, here's a great example. Highly volatile business, up and down, up and down, up and down. You don't want to be in that roller coaster ride. You want something that's nice, slow and steady. And by slow, I mean not with low returns. I'm like, it's consistent. It's not this up and down, up and down. That's high beta. We want low beta. So in other words, we want high alpha, low beta. And that's what this screen factors in. It's called Jensen's alpha. You read about it more on Investopedia, but it factors in both alpha and beta. All right, let's keep going. This next screen is really personalized for each of us. So we want to make sure we invest in businesses we know. That's a key thing or a key tip from Warren Buffett. In my case, I would say moderate confidence on this or the understanding of the business. I always like to do, when I invest in businesses, I like to do a little more homework. I always start with Tykr first, and then I might browse around their site. I might go to YouTube, look at some videos. If there's any interviews with a CEO, I like to see some of those videos. I don't have to, but sometimes I like to do that. All right, let's keep going here. The moat. This was the time-consuming part in the old version of the 4M. Check this out. You click one button, and it's got everything teed up. It's looking at a few companies in the same sector and industry and ranking them in 5 categories. So we got the summary, tied for first place here on sale. We've got the score, first place in this group. That's great. Margin of safety, also first place or tied for first. Then we have the revenue scalability. Looks like we're second place, tied for second. And then alpha, we are second place. Look at this. This Marathon Digital is 2,500. That's impressive. All right. But overall, towards the top of the list on each of these. So that's pretty good. All right, we'll keep going here. We're almost done. All right, we'll let OpenAI do a little homework on management. It's also factoring in those ratios again. We can see here 2.5 out of 10. Could be a bit better on management's side. Let's keep going. And this is the last screen. You can skip this screen, but Glassdoor is a factor. We did a lot of homework when creating Tykr, especially this tool or the 4M tool. There's ratings all over the internet that talk about this. One is from Simpler.com saying that companies with a strong Glassdoor rating above a 4 on a 5-point scale often perform better in the stock market. Essentially, what that means is, happy employees actually do produce better results. So, good advice for executives out there: treat your employees with respect. All right, let's jump to the Glassdoor. I just want to, they might make me log in, but I might be able to get a sneak peek here without logging in. I got a 3.1. Okay, yep, 3 there, and then 70. I'm going to leave it. I'll leave it here. That's fine. We'll click skip. We got a 74. So it's not 80, what we're looking for, but it's pretty close. That's impressive. And you can see everybody else who did a review. All right, let's keep going here through the 7. We're going to speed things up a little bit. That was the 4th point. The next point here is the 5-year returns. I like to, and I'll show you this real quick. In fact, I'll leave this here. Let's go to my profile on another screen. You can set your you could call it time periods, default financials. I like 5-year charts, and the reason is, jumping back here, I like to invest in stocks that consistently beat the market. Now we see this big spike here, and then it kind of fell off. So it is greater than way back here. It was, gosh, looking like a buck 50, give or take. Then a big spike. This happens a lot with IPOs. We can talk about that a little bit. Up to 70, what is that, about 74, 76? Wow, kind of fell off, and it's been pretty flat. Still beating the market over 5 years, but I'm looking at this chart and I'm seeing quite a bit of volatility way back a few years. So we do have a point for that. Let's keep going. We're actually almost done. We'll go to the financials tab. Earnings per share. We want to see this increasing 3 quarters in a row. We see 2 quarters. It was negative 32 cents down to negative 54, but then up to 49, moving in the right direction, but it's not 3. So we're not going to get a point there. The last step is the earnings calendar, and then we're going to break down these 2 tabs and why they're so important. We want to see this stock beating those earnings estimates 3 quarters in a row. So we see 1 in this case. Big win. Look at that. They were estimated at negative 10 cents. but came in at 44 cents. These estimates, so you guys know, it's a lot of analysts on Wall Street that work for larger institutions. They kind of calculate what they believe, and then they kind of roll them up as one average to target with a goal to beat it, or the company wants to try to beat that number. When you can, this is really important. This right here, what I'm about to tell you is why stocks go up and down the most. It's typically driven by, of course, all the financials we went over, but the biggest moves really come from if that EPS is increasing and it's beating the earnings reports. If it misses both those points, like you see an EPS decreasing and it misses an earnings report, then the stock goes down. So just to summarize again, if it's beating those 2 points, it typically, not always, but typically goes up. And then if it misses, it typically goes down. Not always, but in most cases. So if you see a bad earnings report, the first thing I'm going to, so you know, is I log into Tykr, I check the financials right away to EPS. What is that looking like? And then the earnings calendar, see what that number is. And if I see my stocks going down and I see one of those misses, I know immediately, that's the reason why. If it's not that, then I check out the news to see if there's any legal issues or if like an executive like the CEO were fired, things like that can kind of cause a stock to go down temporarily. Doesn't mean it's going down forever, but there are little things to pay attention to. So that's the 7 manually. Let's go to the 7 tab, take a look at what we've got. So 4 out of 7. You can see here the pro tip, the 7 are the 7 easy steps to find a strong stock. The purpose is to add an extra layer of confidence to your stock research process. The goal is to find stocks with a score equal or greater than 5. So we can see here, we're at a 4. Now to zoom out for a second, I'm going to go ahead and we're going to add this to a new watch list. We'll give it today's date. Let's go 3.18, 25. And there we go. It's added. We're going to rank these at the end. Now, just kind of looking at this company, some people may say, hey, they're maybe in the right place at the right time. Maybe something to keep our eye on. I did an article on Tykr. If you guys have time, there's a few really important articles. I'll just point them out real quick. There's historical stock market crashes. We can touch on that in a little bit. And then there's also World Coin, which is an article all about crypto. And there's really 2 different algorithms of crypto at this point. There's a third in the works, but I won't get into that. There's proof of work, which is what Bitcoin runs on, and then there's proof of stake. Proof of work it's not energy efficient, meaning it's not scalable. Here's context. So when Bitcoin was at, and let's go to Bitcoin here in Tykr. Should be up top, number 1. So yeah, it's about 83,000. So when, gosh, this is even more expensive. So when Bitcoin was at $60,000 a coin, it was costing more energy per year than the entire country of Finland to operate energy-wise. Ridiculously expensive, not scalable. So when that price increases, the costs are spread out over grids, and we as consumers we are paying the prices. So if you see your energy bill increasing, part of it is caused by crypto, especially proof of work algorithm. As that price increases, it's harder for the price to go even further. Like, for example, if you go from $50,000 to $100,000, the speed to get there, it's going to be faster than going from like 100,000 to 200,000. It becomes more energy intensive the more expensive it gets. So my thoughts are on Bitcoin. I don't see it lasting for the long haul. I really don't. Crypto, yes, lasting for the long haul, but anything that's a proof of work algorithm, no. When it comes to proof of stake, the first coin on that algorithm was Ethereum. And jumping back here, let's go to Ethereum. we can see, okay, so 1900. This coin or the algorithm is 99% more efficient. So you could go to 100,000, go to 200,000, go to $1 million a coin, and you're going to not consume nearly as much energy. My thoughts are if there's going to be a single world currency, which someday there most likely will be, it's going to be on something that's proof of stake or as efficient. So coming back to Riot, do I see this company for the long haul really being a strong investment? My answer is no, unless they were to pivot to, instead of Bitcoin mining, it would be proof of stake, anything on that algorithm type mining. So anyway, I could talk about crypto all day. That's just a surface level of my knowledge. Um, but yeah, that is Riot. Hopefully that was educational on crypto. All right, I want to jump to the next stock here. I see, Chris, you recommended Mara. That may be, yeah, you got it. Marathon Digital Holdings. Let me grab some water here and we'll dive in. All right, so we're going to speed things up a little bit, looking at the seven. And what I want to do here is I just want to jump here to the details tab. Operates digital technology company. Yeah, mining. I figured it was somewhat similar. A blockchain ecosystem. Does it talk about proof of work or proof of stake? Not sure yet. Approximately 8,000 Bitcoin. Okay, so Bitcoin, there we go. It's proof of work held in investment funds, Marathon parent company. Okay, interesting. All right, let's go to the site. I just want to take a quick look. Four continents of operation, 16 data centers. All right, so it feels like I'd have to do a little homework back on Riot, but this might have a bigger footprint to mine. But again, it goes back to the whole proof of work versus proof of stake. Proof of stake being significantly more efficient. Maybe they're getting into that algorithm. It's like if they've got this infrastructure and you can mine that type of like a proof of stake coin, the world gets behind that. Gosh, you go to the moon. I mean, this thing could really scale. But yeah, that proof of work, after understanding the energy costs on Bitcoin and other proof of work coins, it was a little alarming. I could say that. All right, but anyway, let's go through the seven, see where we end up. On sale stock, great. 68 on the score, so we're above 50 there. Then we're at 80% here. We're actually going to circle back to Riot here in a second. I'm going to talk about share prices. This will be a good pause moment in a bit. All right, so we're at 80%, share price at 12, fair value at 65, and then right in the middle, we're hitting that minimum on the 4M. That's pretty hard to do. Getting above 80 is quite difficult, or 80 or higher, I should say. All right, we'll keep moving. Similar story here. This took off at first. Looks like it got up to, I believe Riot was about 76. This is pretty close. Then it fell off. And yeah, sitting at that 12 right now. So it is, 2,600 like we saw earlier. That's crazy. But you go back in time here is what, about, am I seeing that right? About 30 cents, 70 cents, somewhere in there. Wow. All right, let's keep going. Financials, and we'll talk about the business. All right, EPS, look at that. We are moving in the right direction. Negative 72, negative 42, up to 174. And let's go to the earnings calendar. Wow, quite a few misses in a row. Wow, okay, but a big win in that case. So this is probably going to turn out a little better on the seven. 6 out of 7. Yes, that's pretty good. All right, so my thoughts, similar to Riot, is if you're focusing on Bitcoin, I think there might be maybe some gains in the short term, but again, for the long term, it's when the world really gets behind a proof of stake driven coin. I think people are going to lose a lot of interest in Bitcoin, and a proof of stake crypto coin is going to really take off. One thing to keep in mind is when we move to a single world currency. Um, Let me do this. Add to watch list 318. Yeah, we'll rank these at the end. So far, I find Marathon to be the stronger stock, but we have to keep a few things in mind here to talk about crypto. It is very volatile. And even though this is a business, you can't calculate where coins are going, like looking in um, Tykr here, like Ethereum or Bitcoin or whatever. They don't have an income statement, cash flow statement, and balance sheet. In other words, they don't have fundamentals. If you ever hear fundamental analysis versus technical analysis, fundamentals are looking at the financials. That's what Warren Buffett does. Warren Buffett and a lot of value investors do not care about charts. Charts are used for trading and they're more technical analysis. We don't worry about charts. We focus on the financials of the business. That's what matters. And in these coins, they don't have those financial statements, so you can't calculate where they're going. So they can be highly volatile. Businesses like Riot and Marathon, they're going to ride with crypto because they're primarily making a lot of money around that asset. So if mining is going down, these stocks are probably going to take a hit. Just keep that in mind. It's like kind of think of it like we see this with oil, when prices fluctuate, the companies that support it, such as transporting oil around the globe or pulling it out of the ground, they're taking just as big of a hit, or at least they're moving in that same direction. I don't love that. I like businesses that are generating consistent revenue all year round, no matter what the business is. For example, I'll point out a good one here on my list. And then we're going to talk about share prices, and then we'll jump back into stocks. This is a stock I hold. Of course, not financial advice, but I hold Microsoft. Is it going to be the highest flying stock generating the biggest returns on my portfolio? Probably not, but I'm okay with that. It consistently beats the market. I like consistency, and I know the business model well, and I know a lot of their products. They don't slow down. For example, Microsoft Office Suite, they're not cyclical. They're not driven by markets going up and down. Whether I should say this, most companies are using the Microsoft Office suite, Outlook, PowerPoint, Excel, Word. They're not going to cut their costs and say, hey, we need to get rid of our Microsoft Office licenses. That conversation does not happen. It's such a necessity for businesses. They also own LinkedIn. People aren't slowing down their LinkedIn usage. There's also Windows operating system. There's Dynamics 365, which is an enterprise platform, ERP, enterprise resource planning. Essentially, what that means, you can do a lot with that. You can do like accounting, you can do project management. It's a versatile tool for large businesses. Like businesses aren't getting rid of those licenses or these products. I like that with Microsoft. It's not going to slow down. Whereas a Riot or a Marathon, they can slow down. So just keep that in mind. And then I'm going to talk about share prices here. Let's jump back to Riot and just a quick call out. Riot is at 776. Now keep this in mind. When a stock reaches a share price between $0 and $5, there's a 99.9% chance it will never break out past $5. The reason is large institutions, those are the entities that are buying the most shares at once. They'll buy 100,000 shares of a stock, sometimes a million, and those shares are moving by them, and they lose interest and confidence when stock prices go that low. Now, if they're not going to touch the stock, we, in most cases, should not touch the stock. So that's why I avoid penny stocks, anything that's $5 or less US dollars. If you're in a different country, you may see warnings. We try to do an appropriate conversion, and we can make those changes in the Tykr backend. But we do want to let people know that if the share price is too low, you probably want to look for something else. Now, when something is, or in US dollars, I should say, a stock is between $5 and $10, there's a 90% chance it will never break out past $10. Same situation. Institutions lose confidence and they lose interest. They're moving on to higher priced stocks. So that's why I tell people try to let institutions drive the share price up with their money. Let them use their money to drive the share price above 10, and then consider putting your money into the market. So this one here, definitely in that range between 5 and 10 on Riot. Marathon is just above. It's at the 12. So I have it on the watch list, but again, because of the volatility of crypto, we can see a stock like this going up and down quite a bit. What would be interesting though, and it's good that I'm adding it to the watch list, if they were to change their interest from Bitcoin to a proof of stake crypto, that's where things may become very interesting. So anyway, those are two stocks on the list. Let's keep going. All right, Jeff, you got RBRK. Let's dive in. BRK. Rubrik. Okay, I recognize this name. All right. Taking a look at the details tab, provides data security, like that already. Anything around cybersecurity is a big deal. A lot of money goes into cybersecurity every year. I hold a cybersecurity stock, that one being Fortinet. I'll let you guys, I like to be transparent here. Again, not financial advice, but this is a stock I've held for many years. Cybersecurity is a big deal. All right, let's keep going here. Company offers enterprise data protection, unstructured data protection, and cloud data protection. It's a SaaS model, reoccurring revenue. Love that. Sounds like just a lot of more products underneath the umbrella. Um, Formerly known as Scale Data. Change it to Rubrik. Okay. And then going down here, okay, so based in Palo Alto. Here's a key detail to pay attention to, IPO. So there are many cases when stocks run out of ways to raise money, whether it's venture capital, whether it's private equity, um, maybe it's getting loans from a bank. So what do you do? Well, an option is to take a company public. You raise money from a lot of retail investors like you and I or other institutions. Now, unfortunately, a lot of retail investors they're going to try to get in early thinking they're going to get that IPO stock at like $8, for example, and watch it drive to $80 in the next few years. That rarely happens. So this is advice from Phil Town. Really appreciated what he said is try to wait 4 quarters, so a full year, to make sure that EPS is increasing quarter over quarter and they're beating those earnings estimates. That gives you the sign to maybe consider moving forward. So I like IPO stocks that have, a few years back. This looks like it's about a year ago, just shy. So April 24th of 24. All right, let's go through the 7. Take a look at this stock. We see on sale, score is 68, looking good so far. 80% on the margin of safety. We're not going to get a point here, but in my mind, I'm really just rounding up because it's so hard to get to 80 on that 4N, but 79 is pretty good. Nice find here so far. Jeff, really appreciate this. And I like this. We're moving in the right direction. It's not super volatile in the beginning, like those other two stocks. It's kind of increasing. We see a big shift here. Let's look at the date. Let's go down here. December of 24, there's a big pop. We're going to find out what happened there. It could have been an earnings report. We'll find out in a second. But it's moving in the right direction. And look at this. It's actually, everything's getting pulled down right now. They're at a 70. And their high was what, a 78? That's impressive. Okay. A lot of stocks, especially tech stocks, are severely knocked down at the moment, just because of the tariff negotiations. All right. Looking good so far. We're at a 90 here. We get a point here because we're above 80. Think of it this way. It's the average return of over 5 years for the S&P 500 is about 80%. So that's why it's the benchmark. I like to invest in stocks that are consistently beating the markets. If you want to invest in stocks that, get 20, 30% over 5 years, to each their own, but that's not why I'm investing in individual stocks. I want stocks that are, of course, beating the S&P. If you just want to match the markets, an option is, again, not financial advice. You could simply just go buy S&P 500. All right, let's keep going. Financials tab. Okay, so I'm not getting ahead of myself too much here, but when I see a night, look at this. Just revenue is not the key number. It is important, but not the key number. the quarter over quarter increase here is just nice, steady. That's what we want to see. Beautiful. Let's go to earnings per share. All right, so it looks like we were moving in the right direction. Negative $4.15 up to negative 98 cents up to $6. Wow. But they fell way off. What they could have been doing here is hiring a lot more people. The revenues are increasing, as we saw, but the profits are decreasing. So they're probably seeing an increase in liabilities. Let's go ahead and check that out. Yeah, they are increasing. That is for sure. Not a big step, but let's go to debt. Okay, so we may be seeing here they're decreasing debt is good. They're probably using free cash to help pay for some of the employees. Hiring more people is probably what's going on there. But overall, pretty good financials. I'm impressed. It's just this number here. I'd like to see, gosh, if they went from 636 up to, let's say, 680 or $7, that would have been nice. But we'll keep going. Earnings calendar. There we go. Coming out of the gates, IPO and beating those estimates every quarter, very hard to do. You have my attention with this one, Jeff. Nice. Nice find. Cybersecurity, I checked that box and I like the overall business. Let's go to the 7. We got a 5 out of 7, meets our minimum. Again, not financial advice, but pretty strong stock overall. Jumping back to financials, there was the one point I mentioned on the chart. This is just, if you guys are ever curious, let's see if we can figure this one out. We got a 49 and we jump up to, what is that, about a 69.70, somewhere in there. And that was, again, I think I said December a few minutes back. Yeah, December. Let's go to our financials. Okay, so wasn't that sometimes those earnings reports, if they're really positive, that's when you see the big jump. Earnings calendar. Well, it could have been this. The 47% could have really drove that up. I mean, if you beat by 4%, that's one thing, but 47%, so that could have been it. And it could have been, let's go to the news here. We might have to go back in time a little bit. Let's go, I'm going to go to 100 here. Let's take a look at December. It surges 3 months to now. What I'm looking for is if they acquired a big customer, that can drive up a share price. That really gets institutions excited. Okay, Motley Fool back, yeah, around that IPO. Let's just take a look. I don't want to spend too much time here because I want to keep going through stocks you guys are recommending, but I just want to see if we can pinpoint what that big jump was from. This will give you, this is like a look over the shoulder at why or how I'm using Tykr to analyze some of the behavior of stocks. We know it's typically the EPS and the earnings reports, but when those bigger jumps happen, let's see here. Okay, only happened back in April. Their IPO, it's referring to. Not wasting time in getting attention of investors, that's for sure. What are the newest cybersecurity stocks? Yeah, this is interesting. I'm just skimming through most of the revenues are subscription basis. That's great. Reoccurring revenue. Very high level, Motley Fool. Not giving us a clear detail, but we're not going to rabbit hole this. We'll leave it where it is. But that's sometimes what I'll do is look for news on customers. Let's go to their site. I'm just curious. Sometimes companies like this will show what customers they serve. We can see, aha, there we go. We've got Home Depot, Carhartt, PepsiCo, big names, American Family Insurance, Iron Mountain, Adobe. Look at that. That's a big name. Wow. Nice find. Nice find. I'm impressed. So we've got a winner so far out of the 3. Let's keep going. Federico, you mentioned Dorian. Yeah, I was kind of referring to that um, a week ago at the last one. This relates to, if you guys don't know this business, they've got, I think it's some, gosh, 20 some large ships. They're moving um, petroleum gas around the globe. And you can see its fleet consists of, yeah, 22 large ships. And their site has pictures here. I think I'll give you a nice perspective of what we're looking at. Yeah, there you go. So this is their model, and covering, creating one ship like that is hard enough. To have 22 moving petroleum around the globe is you got a wide moat already. The issue with the business, I can say this, and we're going to dive into the seven, is again, if supply and demand, this is cyclical with petroleum gas. This is going to go up and down a little bit. Let's take a look at the 5-year chart. We can see here at the end, kind of falling down a little bit. A little volatility back in here. It was all right for a while, but yeah, petroleum gas not in high demand as we speak. But let's walk through the seven, and then I'll give you my thoughts on this stock and other stocks like it here in a second. But okay, so we're watched, so we don't get a point there. We do have a score over 50, so looking good. That 60 is pretty good. This tells us the profits are not increasing. It's that EPS really drives the margin of safety. We're on 1%. However, the middle here, 89, I mean, almost 90, that's really, really hard to achieve. And then scrolling down, we can see we're at 197 over 5 years compared to the S&P 500, which is about 80%. So that's pretty good. And it's, again, it was moving nicely here. It's pretty consistent. A little bit of volatility in here, and then kind of fell off. We are starting to see a little increase. We'll see what happens. Again, I'll speak to that in a moment. Let's keep going. The revenue is decreasing, so that's a factor in why the share price has fallen. Institutions don't like to see that. And then, of course, that EPS is, yeah. Again, this is what drives the margin of safety. When you have a really steep, like increasing EPS, and I'll show you a great example. Everybody knows the usual suspect here. Oops, NVDA. Take a look at this. You got the revenue, but then look at the EPS. That's picture perfect. That's very hard to do. Increasing those profits like that, that's what's going to drive that margin of safety to all-time highs like that. So here we're seeing the profits decrease in the business. They're probably, revenues are decreasing. They're probably holding on to their workforce, their employees, probably not laying off a lot of people, maybe some, but my guess is they're holding on to it. That creates those lower profit margins and seeing that number decrease. All right, free cash flow also decreasing. Balance sheet might be okay. Yeah, kind of flat there in assets and equity. Yep. Liabilities, little down. Okay, so maybe they are decreasing payroll a little bit, but not by a lot. And debts, paying off debts. All right, we got a win there, paying off those bank loans. But overall financial, they could be a little better. Still getting over 60 is good. Um, let's keep going here. Financials, we took a look at that EPS. Last tab here is the earnings calendar. Yeah, missing big misses here. Negative, negative. So if we go to the seven, what are we sitting at? 3 out of 7. Yikes. Yeah. Now here are my thoughts on the business. I've got this added to another watch list of mine, but I'm going to throw it on this one here. You can throw stocks on multiple watch lists. This is my favorite feature, the watch list feature. The reason is, if you guys haven't used this feature, when your summary, score, and margin of safety on your stocks on any watch list, doesn't matter which one, you automatically get notified in those daily emails. You're going to see them listed. So, for example, if I have a stock that's on sale and it flips to watch or overpriced, I'm going to see that and I can make a move. And we can talk about the buy and sell here in a second. Here are my thoughts on Dorian and other businesses like this. It's when the market really takes off and other stocks like this, you're going to see their share prices kind of move together. Again, it's cyclical product. If you're holding this stock and you're in the negative, I wouldn't freak out. There might be another tide coming where, hey, petroleum stocks or anything supporting the petroleum industry is going to take off again. Anything around oil, they could increase. Another big wave coming up. So don't freak out. I know some people have been a little concerned that these stocks been hammered on a little bit, but with the tariffs, the negotiations happening as we speak, and then just the nature of the cyclical business, it is just down at the moment. I would keep my eye on it and maybe see what happens in the future. I'm going to jump to another stock here. I want to pause and just talk about for a second difference between a buy and sell seems to be the most common questions. So if you go to Tykr, we'll go there right now, go to education, investing tips, onboarding. You're going to get a new email every day when you join. Some of you have probably seen this as we speak. You can read them all in one go. You don't have to read the emails, but we want to kind of touch on education from multiple angles to really help people increase confidence. That's the reason. That's the driver. More confident or more education really helps increase confidence to do this on your own. And if you scroll down, I think it's number 9 and number 10 talk about when to buy and when to sell. So we'll touch on those real quick. Reason is these are the top 2 questions we get asked the most. So when to buy is a 2-step process. It's when a stock is on sale or changes to on sale, and that 4M is 80 or higher. Again, that's pretty hard to achieve. And then flipping the coin over. Let me grab water here. Give me a second. When you sell, that's a 3-step process. It's when that summary changes. Again, that daily email lets you know changes to watch or overpriced. That 4M drops to 59 or lower. That's overall weakness in the business. That's the math part is falling. All the financials are falling. Then you have the meaning. That's the business model. It's becoming a weaker business. Then you have the moat. The moat is not as wide. It's becoming more narrow. And then you have the management. Management is not performing as well. Overall, that's when I kind of say time to jump ship, jump into another stock that's stronger. Opportunity cost. You could hold on, maybe make some money, or you could sell, move to something else. Now, step 3 is really that selling point, which is making sure you sell for a profit. That leads to rule 1. Thank you, Warren Buffett. Rule 1, don't lose money. Rule 2, do not forget rule 1. So in my case, I do not sell stocks for a loss. I have the self-discipline to hold them, let the market rally, and that'll lead to my next point here, which is the tariff negotiations right now are very similar to what happened in September of 2017 through March of 2018. That was the first, what I would call Trump tariff war. I've got an article here which highlights the last 100 years have had 17 recessions with an average downturn of about 10 months. That's crazy to think. That tells us that recessions and bear markets do not last very long. One of those being, let's go here, I think it was, number 15 is the Trump tariff war. Market went down about 7%. Tech stocks went down a little more. Semiconductor stocks took the biggest hit. Some were down 30% or more. So I told people with this term around, the market knows, like the market, I will say this it can think like a human a little bit, and it doesn't always repeat, but it does rhyme. So we know Trump was going to do this. Are we going to expect 6 months this time around? I don't foresee it. We're about a month in. I expect about 3 to 4 months. We'll see if that happens. But some people where I'm hearing the fear mongering on the news saying, hey, we're going to go into another recession. I really don't think so. I think this is just going to be a temporary pullback. And we're going to move into a rally, and stocks like a lot of the stocks we are talking about today, including Dorian, could, not guaranteeing this, but they could really start to increase at that point. So keep them on your watch list. Hold on tight. Don't fear sell. I do hear or do see emails every once in a while about people talking about, hey, the market's down. Is it going to go down forever? Should I sell now before everything goes to zero? I'm like, that's when I just send them this article and say, hey, just don't freak out. This stuff happens all the time. The worst of the worst was, of course, 1929, the Great Depression, that enacted several laws, as you can see here. Securities Act of 1933. A lot of changes were made since that point that should prevent, not guarantee, should prevent something that bad from ever happening again. Of course, there's been recession since, but not nearly as bad. All right, I want to try to squeeze one more in. We've got a few minutes here. Any recommendations from you guys? Otherwise, I'm going to jump to the AGYS. Yes, I recognize that one. Thank you, Jeff. Yeah, I think it's Agilysys is how you pronounce it. I'm going to refresh here on the details tab. What are we looking at here? What's the business? Operates as a developer and marketer of hardware and software products and services. Hospitality industry. That's right. They serve hotels. Last research I did on this company. Not the first person to bring this one up. It caught my attention. Um, yeah, let's go to their sites. And quick pro tip here. If you're ever curious to know what a company does, go to like a products or services tab. I see here solutions. So, gosh, they've got a lot of products. This is good. You want a business that's generating a lot of different revenue streams. If you're an entrepreneur, we know you want to be focused, build that first revenue stream, but over time, kind of diversify. You've got products you can cross sell, you can upsell. It just creates a wider moat. It creates more confidence for investors when you have multiple revenue streams. It's just a healthier place to be. And they certainly check those boxes. I mean, look at that hospitality and leisure ecosystem. A lot of stuff in here. I want to just dive into this real quick. It's been a while since I looked at this company. It looks like booking, paying, really optimizing the whole experience. I think point of sale is a big deal. Like, you go to the front desk at a hotel, it's a lot of that automation is taking place there. Um, yeah, I could spend probably all day diving into the products and services, studio solutions, resorts, casinos, cruise lines, healthcare, stadiums, restaurants, airports. Wow. Wow. You can find a lot of customers within those categories. So, like the business model right off the bat, let's walk through the seven. I got a few minutes here. I've got time. All right. So, on sale, looking good. Score is 74. Margin of safety is 72% over that 50%. So, that's great. In the middle, right? 81. I think this is the highest of the day so far. And we're at, yeah, 338. Look at that. This is what I like to see. We saw earlier some of the crypto related stocks. They had that big spike and then it fell off. They were like over 1,000%. But this one, it's 300, but it's moving slow and steady. Of course, this period here looks like the recession of 22. It was actually November 21 through March of 23. It was about a year and a half recession. Um, this here, yeah, we see it going down, but then nice and consistent since, and then a big fall off. Let's take a look. We'll keep going. And then EPS. All right, 2 quarters in a row, not three. We want to see three, but still moving in the right direction. It's positive. Let's go to earnings calendar. And yeah, there we go. Very consistent. Look at this. Consistent, consistent. Last miss was 2020, almost 5 years ago. Wow. Wow, that is a nice track record. Let's go to the seven. It's a five or six. Six. Yeah, there we go. That's a strong stock off the bat. And now let's take a look at the fall here. We know the tariff negotiations are driving a part of this, but we're going to take a look at the news and see if there's any issues. 136 down to the 74. Gosh, almost cut in half. Oh man. Let's see here. An investigation from a law firm regarding possibility security fraud violations. Well, that's going to contribute to the downturn, that's for sure. Now, keep this in mind. We saw this with Meta a few years back when Zuckerberg was in court for it was like the data sharing privacy going on with Facebook. That hit Meta, but when legal issues happen, they typically don't hold a stock down forever. Keep that in mind. You can have a great earnings report, one or two, and again, not a guarantee, but people can forget about violations that happened in the past. I want to take a look here, see what the deal is. Applicants, securities fraud. Right away, when I see securities fraud, is it cooking the books? What's like that? Essentially, what I mean by that is you've got people organizing the financials, and let's say it's the financial statements are not reporting accurate financial statements as they should be. Issued a press release announcing third quarter revenue below expectations guidance, resulting in significant revisions to revenue guidance. They underestimated the sales that um, possible violations, not proven. All right. Not actual violations, possible violations. Interesting. And that's 3/4, so March 4th. I see an award here for a software, spa software. Okay. All right, so I wouldn't be too concerned. I like what I'm seeing when you see these dings like this. That you have my attention. I mean, stockpiling is you probably see those alerts when you have an on sale stock and it drops 10% or more within a 7-day window. That can be a good sign. So this may be a major stockpiling opportunity. Of course, only buy stocks based on your own financial goals, but this is a good opportunity to move to our watch list and kind of roll these up from strongest to weakest. Give me a second here. There we go. I'm going to rank by 4M. Yeah, this will give us a nice visual. Oh, LPG was the highest there too. Let's do this. I'll go alphabetical and then I'll give you my ranking from strongest to weakest. So the best of the best here, in my opinion, would be Agilysys for sure. Then I'm looking at Rubrik, cybersecurity. I'm a big fan of. It's not going away anytime soon. Those are by far the two standout options, well above the rest. And then I'd probably move to LPG as number 3. Mara is number 4. And between Mara and Riot, the reason is I chose Mara is they do have the stronger financials overall. Riot I put at 5th place. But yeah, the top two for sure. In fact, I think I added Agilysys to my main watch list a long time ago. It's been one to think about. If I sell anything on my list, I may move to that. But Rubrik, it's like a younger version of my Fortinet that's sitting in my portfolio. So again, Jeff, that was a nice find. So yeah, there you go. There are 5 stocks to take a look at. And again, thank you guys for joining. Please take a look at when you have a moment, go to the webinars tab, look for future webinars, sign up, come ready with stocks. I always like to take a look at stocks I've never seen before or some potential hidden gems like we looked at today. Really appreciate it. But again, thanks for your time and we'll see you at the next one. All right. We'll talk to you soon. See ya.